Hey, it's Mac with PriceActionTradingSystem.com, and it is Wednesday. It's March 5th. This will be our chart lesson for today. And here's a quick look at our daily chart. As you can see, we have this channel working down, and we did get a close outside in the new low, um, a much lower low actually. And it looks like we're trying to rally out of here. We've relieved. We're still way oversold. We were severely oversold at one point yesterday and today. We relieved a good bit of that today. I wouldn't say a good bit of it. We relieved some of it. Um, so we'll see. We closed much higher than we did yesterday. We still haven't tested this area across here yet. We'll see if we're able to test that. Maybe this line. Maybe this line is here instead. Maybe it's moved a little lower. It seems to fit there. We're not catching these two bounces, but maybe this is all we have down here. So we'll leave it there for now and see how that works out. And I'm going to move this one up here, up just a hair, because I think it fits better right there. So let's leave it where we have it here, and we'll see how this plays out. If that's the case, we did pull back and retest this. We just could not close through there. And that would kind of make sense as to why we backed off the highs some um, late right into the close. As of now, it appears we're trying to trade higher, but what happens right now, you hear me say this every day just about, is irrelevant. So market's only been open for 45 minutes, and not much is going to happen during this point. Nothing to have anything to do with tomorrow. Really, I mean, we could trade straight down, and it could be straight up for tomorrow. We could trade way up here and be back down here by tomorrow. So you can't really put a whole lot into what that's doing that first hour or so. Uh, but a relatively bullish day. We didn't close on our highs, but we opened here and traded way down, and then traded back up and tested this, but did not close through it. So we'll see what tomorrow brings. But let's flip over to our 2000 tick chart, and we'll take a look at it and go through the trades. But we're still way oversold, so we're still overdue for a rally here. And when that's going to come, it's hard to say. You can stay oversold much longer than you think you might. But generally, you can see when you get down in here, it takes off. And you can see that every time. But so far, that hasn't happened yet. I mean, we got down into it here. It looked like we were going to take off, and then we traded down 2 more days. It looked like we're going to take off now. But will we? That's yet to be seen. So let's flip over to the other chart and take a look at that. And let's work through the trades. Okay, here's our chart. You can see we started out in this range, and like usual, it looked like we were going to drop lower. But today, we bounced out of there, shot up, and we got a spike and channel up, and then we just kind of chopped around into the close is what it looks like to me. So today, there's not as much price act. There's still a lot of volatility here, don't get me wrong, but there's not nearly as much volume as there was yesterday. And today was a little easier to trade. You'll see as we kind of get into the chart, uh, the ranges were a little more structured. There were a few more second entries with the trend at the key entry points, things like that. So there's a good bit of trades today, and I think a lot of them were fairly decent entries or easier. I mean, it would have been a lot easier today to find two winners than yesterday. So don't get me wrong, there was a chance to find two easy ones yesterday, but you have to be patient and you have to be able to sit there and wait and wait. Some of these you aren't going to see, and so you got to wait on the sure things, the easy ones to see. And there weren't many yesterday, but there's a few of them today, and you can see not near as many green ones today. So it was just a little clear, but we'll zoom in here and you'll see as we get through the chart why it was a little bit easier to. And we came back to the key entry points a little more. Now 7 o'clock came right here as we're kind of bottoming out here and then rallying back up. I believe this was right before 7. No, that was right at 7. And that was tempting You might say it tried to go higher twice, and you're still looking for a new low. But and I think there is enough room there, but I'm not crazy about that. The signal bar is not perfect. I mean, there's a lot more room than you think. There's 4 points there, but I'm not crazy about that. If you took it, realizing it's a little aggressive, more power to you. But it's not a perfect setup by any means. So generally, you want to get short up here and you want to get long down here. Not You don't want to be getting long or short into the middle, unless you got a channel that's kind of played out. So this is the first real channel after that, and you get a first entry, and then there's a second entry short here. But I don't think you want to enter that on the engulfing bar. And by the time this closes, you're way down here, and you've already had your break and two swings to a new low here. So you don't really even know if it's going lower. And it looks like we're just still in the range here. And it does give a little breakout pullback short and swing down. But that took us into this first news item. Ignore this because this is tomorrow's news items. Today it was, I believe this was unemployment and this was PPI. And obviously this was a dud for the most part, considering it was high volatility type news. But you got to sit tight during that. And then we get a little failed breakout. That is very tempting, and if the prices would have broke above it, I'd said go for it. But you get the inside bar. Like usual, you get an inside bar, and it's dangerous to take that break above it. And you see what would have happened here. You end up with this crazy bar. It ends up going higher, but and if you did enter here, your safety stop would have to go down here anyway, and that makes this more risky. And this is a good example of why you have to put your safety stop down there, because if you put it one tick below this bar, you see you would have got stopped out even though it went higher, exactly where you thought it would go. So just avoid those inside bars and you're going to be better off. And if you do happen to take one, with occasionally there is a reason you could justify if you're a really good chart reader, but that's why your stop goes down here and not right here. This takes off, it turns down up here, no signal bar. That doesn't qualify for a lower high. And you actually get a second entry here. Notice what happens. You get a first entry, then it turns back up and then turns down. So that's a second entry short, but that looks too sideways congested. You only got to go a few ticks to get a new low. And there probably is enough room between here and here to get out, but I just sit that one tight. And this is not good enough to reverse on a failed breakout, in my opinion. Maybe that closes in the upper 2/3. It's close. I'd skip it. And then you got a channel working up, a close outside, a move to a new high, and you make a double top. So that is a second entry short. You can consider that a lower high, and it's a very bearish signal bar. And you got plenty of room to down here. And you can see it turns out to be a pretty nice move. Then it reverses. Again, it's tempting to go long right here, but it closes. You can see how the last few bars have closed below that EMA, and then this one does the same thing. And so that's what you're worried about with it turning back down one more time. It ends up going higher, but this is kind of the concern, and sometimes it'll go sideways or back down. So again, that's a possibility. The fact that we didn't even get back to the highs here, notice how you made a double top lower high. So I'm really weary of that trade right there. I'd be very leery of it, and but maybe, if you want to be aggressive, maybe you take it, but I'd stay away from it. It turns out to be a good move, but you just don't know that. Then you get the failed breakout up here and the lower high with a good signal bar. Just go short right there. This is another one that moved really fast. You may not be able to get into it, but if it jumps over like that and keeps going, drop that limit order, sell order there, and give it a few minutes, see if it comes back. Don't wait for it to come all the way down here to come back. But if it comes back in the next point or so, maybe you go ahead and enter that trade. That's the way I would recommend it. And again, we do bounce at the lows. And you get another first entry, but you make another new low there, so it's another first entry right there. That's just sideways. So just sit tight and see if you get I mean, if it would have broke above that bar, you could have gone long there, but it doesn't do that. And then this bar doesn't qualify. and then of course it just shoots straight up. But you get a close outside, a move to a new high. That's a second entry short, and I meant to mark that green. Should have been green. So maybe since it's a second entry and there is a close outside new high, you take it, and notice where that is the midline of this range as well. So maybe you go short there. I think you need a lower high, which comes here, and that bar doesn't qualify. But you get another chance at it here, and you've tried to go higher 3 times and failed. So that's basically you got a triple test there. So basically you got to, I don't know what I'm doing here. Basically, you got a triple test there. It doesn't quite come back and test that, but it still tries to go higher 3 times at an extreme where you're looking for a reversal. You're still way away from the EMA. I like that trade right there. We run on down here, just a first entry congestion, first entry no signal bar. Comes back here. First entry, that signal bar doesn't qualify. And then that takes you into the next news item. I'm trying to remember where 9 o'clock comes. Well, maybe it happens right in here. Maybe it happens sooner than I thought it did. Yeah, so this starts rallying here, and then that's where the news came in right there. And you had to be flat here, so it doesn't matter, but I'm just kind of pointing out to you where the news hit. And you can see this one actually made a difference. It rockets up. I was thinking that came in right at 9, slightly after 9, but I guess it didn't. I was wrong on that. So, but again, you would have been flat, so it doesn't really matter when it happened. And you'd want to probably be flat through this, and at least 4 or 5 minutes. And then by 5 minutes or so, it looks like it's kind of settled down. And so maybe you take this second entry. Notice this one's coming down. You get a close outside, new low. You've already got this one working up with a close outside, but no new high. So prices are going to attempt to make a new high, most likely. And you can see we get the close outside, first entry, second entry, and that's a nice signal bar, and it does run up and make a new high. And then you get a lower high here. So I like going short there. It tries to go higher a third time, but the signal bar doesn't qualify. And then you just start trending down, close outside, move to a new low. It's maybe you go long right there. It's just kind of, I mean, it's kind of sideways anyway, and there is some resistance there. I think you've got enough room to get out before that resistance. And you can see you got a couple of points there, a couple of points plus. So maybe you take that trade. It doesn't go very far and it turns back down again. And here you've got a reversal pattern, and where you're looking for a possible reversal up here. Notice it tries to go higher once, twice, and fails, but it's also a first entry, second entry. So I really like that when you're playing both those together. It's a little sideways, so without the failure, I don't know if I would take that second entry, but maybe you take it. I like it if you recognize the failure, but most of you shouldn't be trading failures. You should only be trading the second entry. And the rest of these are first entries all the way down. So, and of course we bounce off the low, run right back to the midline of the bit down channel. So now it's pretty obvious. Maybe we're in a down channel. Actually, I take that back. Most of you probably wouldn't have this. You might have had it a little steeper to start with. So you probably should have it started, but it's not been confirmed or anything. So you couldn't really trade that off of the midline. But you can see it turns down right there. It's just a first entry anyway. And then you get a first entry, second entry, but you're right at the low of the range, and you don't know that this is going to hold. Actually, we were talking about this long too. You could still take that long because it's a failed breakout, and it's your break and a couple legs to a new low. You'd prefer a higher low, which never comes, but you could still take that trade if you want to be super aggressive. But there's no short there, and then there's nothing here because you're just chopping along. But notice here you get a second entry there, but your signal bar is not good enough, and then you get a higher low here, with still room to get out before here, and hopefully it's going to fail and take off. So I like that one. And then you get a reversal type pattern here. Notice that new low, and it tries to go short once, twice, and that's the way you want it to do. Go above the EMA, come back, and it tests both the EMA and the previous support, and it rejects prices pretty quickly. So if you can get in, go long there again. If it gaps over and takes off, so maybe you have to put um, a limit buy order there and see if it'll come back. Now I wouldn't let it go all the way to here and then come back. You'd want it to come back within a point or so there, because it could go all the way up here and reverse and turn down on you, and not only stop you in, but stop you out a few minutes, another minute later, or even quicker than that. So I'd sit tight on that. I do like the reversal. That's just a first entry, and then you turn down. And this does confirm the trend line up there. Big bearish bar way away from the EMA. You've had your break and 2 legs up. Perfect signal bar. I made this green, but you could almost argue for this to be red. You might just wait on a lower high to be sure, because sometimes you'll get that third little push, and with that far away from the EMA and right at a possible trend line, and maybe you don't know exactly where that trend line is either yet, so you set it off these closes. But when it comes back here and gives you another second entry and a lower high, and you've got to close outside and you high all in one bar, definitely go short there. I marked that one red. That's a nice move. Same thing here. You're running up. You get a close outside. Actually, the close outside is here. This one doesn't close outside. Move to a new high, and it's right at the trend line again. This one does press just slightly outside and then reverses. I like going short there on that nice signal bar, and again, the bottom falls out. So if you just sit tight and wait on these couple of second entries, technically this is not a second entry, but it's easy to find that trend line by now, and you've got your close outside new high, and you're still right at the key entry point with a great signal bar. I mean, if you just catch one of these, one or two of these, you're done for today. And this runs down, then starts going sideways just below the original range. So at this point, you still don't know if the trend channel is going to win out or the range is going to win out, but it ends up the range. The trend channel wins out. There are multiple tests across here. That signal bar is just not good enough. So unfortunately, you can't catch that move. Close outside new low, and then it reverses, and you just get a first entry short. And then there is a second entry short here, but too congested, too weak a signal bar. First entry, and then it bounces down there. That's just a double bottom, and you don't really have a convincing close outside and new low in place. So I'll just sit tight. Now you got to trend up, close outside, push to a new high, and it turns down. There's a second entry there, but the signal bar is no good. Now you got a trend channel working down. You don't get a close outside on this one, and it just bounces. But that's a triple test. Maybe you should make this green, because it could have stopped you out there. Maybe I like that in real time, but looking at it after the fact, I think I had that marked wrong. That should be green, and see if you get a higher low, what you do here, and that's a second entry, and that one just takes straight off. That's the better entry. This is just, you're pushing it. Even though you got at least a triple test, you might even argue you got a triple test here, but there's no close outside that channel. So I definitely wouldn't take that one. But by here, you've got at least a triple test. Maybe you can even argue that's a quadruple test. And but again, you're still inside that channel. And you see it does get a close outside and tries to make a new low. And sometimes it's going to be successful, and that's going to stop you out. So that's a little aggressive, and this is the better trade. And this one turns down, triple test, but I think that signal bar is too big. It's 28 ticks. Technically it's a good entry though, but it's just not. I'll mark it green, because technically that is a good entry. It's just a big signal bar with a lot of risk. It works easily, drops down, you get a close outside, move to a new low. That's just three bars sideways. Wait and see if you get a higher low, which comes here. And this makes a double bottom, but it's still considered a higher low. But the main reason I like this was it closes inside the trend channel line. If you use that last close there, and you're still touching all the others, this closes right inside. So a break above that is probably going to send it to the other side, or at least to the midline, or attempt to. And you can see the trend channel keeps going. You get a close outside the new high all in one bar, but the signal bar is no good. And this time it breaks lower. Now you'll probably get a measured move here is what I would look for. And you can see that's pretty much a perfect measured move. And it tries to go lower multiple times and can't, and then bounces. If it does, that's a good sign. It's probably going higher. I like this one just because you had a triple test, but it makes a little lower low. It still closes above that, but I'd sit tight. I mean, you could take this one, but you're better off to wait on that higher low. So I'm going to mark this green, and this is your higher low. That's the better signal bar. That's the better place to go long. And then it gives you this other bar, which is back inside here, and it's got an equal low, and it's very bullish too. And it's a second entry. If you draw your trend line down there, you get a close. I don't know if you don't really get a close outside the new low, but you just get this nice bar, and it's the second entry long. First entry, second entry, which you're not really looking for second entries in a range like that, but it's just another bar that makes an equal low right at the lows of the support there. Now, if you didn't have this bar in the middle, I'd call that just a high, just a higher low and a higher high bar. And you couldn't treat that like a tradable higher low, but it's those two matching bars that gives you that. You can treat that like a new swing low. If it didn't have that other matching bar, it would just be this part of the same move. I hope that makes sense. It's a little more advanced, but that's how you would look at that. And then, of course, now you got the low, first entry, second entry. So you got the reversal pattern here off these lows. If it breaks higher, it's probably going at least back to the trend line, maybe back into the range. And you can see this thing just takes off. And you get a close outside here with a first entry. It moves down, and you get a second entry here. The problem is you don't get a close outside of this down channel, so that feels a little. And you can see it closes right on that line. That feels really risky, so I don't think you want to take that. I think you need it to close outside and then get a new low, but you don't get that. So even though it's a second entry, I would skip it. People always say, well, when should you not take a second entry? Well, there's your good example. And it's just not a good setup. It ends up working. I mean, that's the thing. The second entries are so powerful that you can actually read the chart wrong and get it wrong a lot of times and still get a winner. But if you keep taking them, you're going to get burned more often than you want to. So you just have to avoid them sometimes. And this runs to a new high. This was an engulfing bar, and you might, it's you definitely need a lower high or something here, and you don't get it, and then you're just chopping sideways. I don't see any shorts or longs I like there, and then all of a sudden it breaks up, and a measured move is this line right here based on the width of this, and you just get a measured move up, and you're still bouncing along. Now, you might say, could you go short right there on a breakout? But I wouldn't, because it's not a great bar. I'd want to see if you got a lower high, and you don't get that. It just bounces a few times and takes off. Technically, you bounce 3 times here, but because of this measured move, possible resistance that's held so far, you don't have room to get out there, and you can see it. The couple of bars, and they don't really go anywhere. So the right move is to sit tight there, not going long. And then these are all just first entries all the way up until you get a break. Now here you get a first entry, second entry, but then you get a close outside and a new low all in one bar. It's not a perfect signal bar, but this one you could argue is played out, and you're a little bit away from the EMA, so you could go long there. It's a little aggressive. I marked it green, but it's a possibility. and it just takes off. And this is a spike in channel here. So this is a spike up in a new channel. And so, and how do you know that? Well, by the time you get there's technically a micro channel here. So notice you get the close outside and a couple of legs up, but it keeps going higher. So you go ahead and once you get that 2 legs up, I would go ahead and draw your new channel. Otherwise, be looking for a reversal. But if you can draw a new channel and get it, which is this really, I mean, this is so tight and so strong, it makes sense that you get a spike in channel here. But notice you get a move down first entry right off the trend line, then you get a close outside and a second entry. I marked this green for a reason. The reason is you're going long right into resistance there. You can see that all the way across there. So that's dangerous. But this bar broke lower first and turned up, and that is a mostly bearish bar. And a break above this bar, this red bar, the break above it was the second entry. So you could trade this on the engulfing bar and go long one tick above that, and that gives you plenty of room to get out. You would have got out anyway, but you can see it could have turned down easily on you, and even when it did make enough, the bottom fell out quickly. So you can only enter that on the engulfing bar, and only because that's a nice bearish bar, so it's going to trap people when it breaks lower. So if it suddenly reverses and goes higher, you can see how it shoots straight up there until it finds resistance at the previous resistance point. So, and that's because it traps some shorts there. And then it breaks out here and fails and turns down. Now that's a huge bar again, 33 ticks, but it's a great setup. If the bar wasn't so big, I'd say you have to take it. So I'm going to mark it, but it'd be up to you to decide if you wanted to take that much risk on a bar. But it's still a good setup. You've had your close outside, a couple legs up to a new high, and a very bearish bar. And you can see what happens. The bottom just kind of falls out again. Now that one's a first entry, that one's a first entry, an engulfing bar, and then it reverses again. It's definitely 2 legs down, but it's not a second entry. Let me show you that. And you can see it's 2 legs down. Actually, I take that back. You get a new high here. So that's a first entry, second entry. The problem is the reason, and you do have a close outside and a new low. You have everything you need there to go long. Good signal bar, way away from the EMA. And looking back on it now, I think it should at least be green. But the reason I didn't like it in real time is because you weren't quite back to that trend line. And you'll get burned more times than not. And you can see, even though this was played out and we got a new trend, it took them a while too. They brought it back to that trend line before they let it go higher. And that's generally what happens. So that's why I was afraid of that one. But it turns out to be a good move. Close outside, move to a new high. And it struggles here going sideways because people, the prices really want to go lower, but everybody thinks it's going higher again, and they're trying to buy, and the smart traders went out, obviously. And so, but I like this one just because you move up. It's 2 legs to a new high, and even though it doesn't break lower there, that's clearly a second entry short. If you went to a slightly smaller chart, you'd probably see the break lower and 2 legs up. But I like that one. And then, of course, this one, the signal bar is not good enough. Now you got a triple test with a good signal bar. Now, again, this broke higher first and failed. There's still room to get out from here to here. It makes it a little more risky. That's why I marked it green. But if you enter that on the engulfing bar, I like it. When it broke higher and failed, it's probably going to trap some people. And you can see it shot down there pretty good. I think you would have been out of that even though it bounced. Yep, see, that's almost 3 points. It doesn't look it. But you would have, even though you wouldn't have got a runner to run to the other side, you'd already been out of this before it bounced. So I like entering that on the engulfing bar, but not so much down here. And then it just gets stuck, so you can't do anything there. and you get a little failed breakout. Now, I didn't mark this. This one's right off the key entry point, but I didn't mark it because this trend channel is working down and there's no close or break or anything. And you see they do try to come back a few times to test that low, and they finally test the trend line again, and it holds and it takes off. But people, they were trying to bring it back again. And so I didn't like going long on that first entry. There's a second entry long here, but the signal bar is no good. And then you get a decent signal bar here, but it's an inside bar, and you don't want to do that. And you just don't get a chance to enter that. It's unfortunate, too, because it's really a nice move. But when this happens, you know, I hear people say, I knew I should have entered, but there's no setup there, so you did the right thing by not entering. And you can't second guess because you get a good move, because you will get a lot of bad setups that lead to good moves. But we're sticking to the sure things, the ones that we know are going to work, and we don't know this is going to work. You see that it's not rejection there at all. It's holding prices. But eventually it gets a little momentum, and once it gets that momentum, it just takes off. That's first entry, first entry, first entry. And then it's just too congested. This is at the upper side. Then you get a little overshoot there. Now, it's tempting to go short there, but I just sit tight. And it does come back and give you a lower high here, but it's a first entry. And you might say, okay, well, here's a second entry, but this is it breaks higher and turns down. And I think you've moved too far. You can't really enter that as a lower high. You might say, okay, there's a second entry, but the second entry is already triggered and it looks kind of congested. So that's a possibility. There were just so many good trades. I don't know. I don't see risking one like that. But it does end up going down. Then you get a close outside, and it starts. You get a first entry, and then it comes back. And when it turns down here, that's a second entry, and that's short. And that's a pretty good signal bar, and there's plenty of room to get out. It does look a little sideways, but the fact that it tried to go higher, 1, 2, 3, I think you can treat that like a triple test as long as you got room to get out here. And sure enough, it goes down. You see, that's why you got to have the room, because it does bounce back. So before it ends up going lower again, and it may not go lower again, it may bounce back and reverse. So that's why you have to have the room to get out. We've had some good examples of why you do certain things here today as well. And then this one's running up, close outside new high. That's just a first entry though. And then now you got one working down, close outside new low, and it also failed to go lower. First entry, second entry, and you got a first entry. That's more than a second entry long, but you're just playing the failed break lower that reverses. And you got to wait for this to close. So I like going long there. And you're expecting prices to go to the other side now. They just came off the lows, so you're not really expecting them to come back to the lows here. We're working sideways. Look how flat the EMA is now. So we kind of moved over to range rules, but you still want to kind of pay attention to these channels. And you can see this one, close outside, new low, and it reverses. Close outside, new high, and it reverses. And you get two legs up to a new high, and where does it reverse? Right where it kind of reversed previously here. So I like taking that one. Here you're running down, close outside. You don't get a new low though, and it's just a first entry, so just sit tight. It breaks out, gives you a close outside on the first entry, moves to a new high, and gives you a second entry short. Do you have enough room between here and here? If you do, go ahead and take that. There's a chance it could bounce there and go higher again, so you got to be careful. You got to make sure you got enough room. And you've got just a tick extra or so there. And sure enough, it bounces there. And it moves back up to the high. And now it turns down right off the original trend line up there with a big bearish bar. So I like taking that one. And then you get a lower high here. I like taking it too. And then the bottom falls out. Boom. And you get a close outside, but no new low. So it may come back. But notice you got a trend working up. Close outside, new high, turns down. It's like a first entry, second entry, third entry, and it looks real congested. So I don't like going short there. Plus, we just came off the low, so the odds are we may be going here. But this thing comes back with that big move down. It's trying to retest those lows again. We end up just getting a double bottom, and again, it breaks lower, fails, and turns up. There's still room to go long one tick above that bar if you wanted, but again, I like the engulfing bar, and that anytime I tell you to enter on an engulfing bar, that's very advanced. It's only for consistently profitable traders. The rest of you leave them alone. And people ask me, well, can't find any information on that on your website or in the manual or whatever. That's because I don't teach it, because it's more advanced, and so you'll need to pick that up organically as you trade and get better at trading, much like the failures, the reversal failures and the trend continuation failures. I don't teach those either, because all they do is confuse you and cause you a bunch of losses, and you don't need them. You need to be very good at reading the chart to trade these, so remember that. But I like entering on the engulfing bar. I even like entering it here, but it's very risky if you're wrong, because it's 26 ticks. But it's a triple test for sure. And a good signal bar, so you could go long there too. And this thing runs up, close outside, new high. And if you'd had a good signal bar here, you could probably argue for that one to be green. But you don't get it, and that takes you into 230. So 2 days here in a row. I mean, today there's not as much price action, but we had a lot more trades, so it's still almost a 40-minute chart lesson. So I'm not going to beat around the bush here. I'm going to wrap this thing up and get out of here. And so that's going to do it for today. Hope you had a good trading day. We'll be back again to do it tomorrow. Believe it or not, tomorrow is Thursday, I believe. Yes, tomorrow's Thursday, and that's going to wrap up our week as far as chart lessons. No chart lessons on Fridays. But anyway, that's it for today. I'll see you tomorrow. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.